Welcome to the podcast that will teach you how to successfully invest in and build steady streams of passive income from the highly lucrative niche of mobile home park investing. Veteran real estate investors Kevin Bupp and Charles Dehart from Mobile Home Park Academy will personally share with you the valuable lessons they've learned along their journey as mobile home park investors, so that you too can learn how to build massive cash flow and huge profits from this extremely lucrative niche. So without further ado, let's welcome your hosts for today's show, Kevin Bupp and Charles Dehart.
Welcome, guys and gals, to the Mobile Home Park Investing Weekly Podcast. We'll provide all the information that you need to know to successfully locate, negotiate, close on, and make huge profits from the lucrative niche of mobile home park investing. I'm your host, Kevin Bupp, and today's show, we're going to be speaking with real estate investment expert Tim Kelly. Now, Tim is the founder and president of Kelly Housing Group, a real estate investment firm that specializes in residential multifamily properties and mobile home parks. Tim is an active duty chief petty officer with the United States Navy and has served his country for 13 years. Now stationed on shore duty in Pensacola, Florida, he is fully pursuing his dream of owning and operating multifamily real estate and helping others realize their financial freedom goals. Tim has been investing in real estate since 2011, where he purchased his first single-family residence with the intentions of forcing appreciation and flipping it for a profit. This particular investment was also his first house hack, and he quickly learned the benefits of long-term buy and hold real estate were much more aligned with his own personal goals. And so, guys, in today's show, we're going to dive deep into Tim's business model and see what makes him tick, and also see how he's been able to build a successful real estate portfolio while currently on active duty status with the Navy. I mean, the guy's got a full-time gig, and he's been building a massive portfolio behind the scenes, so it's quite impressive. And so with that, I'm very anxious to get onto the show with Tim, but before we do, here's a quick word from our show sponsor, Sunrise Capital Investors. Hey guys, Kevin Bupp here with Sunrise Capital Investors. As you are hopefully already well aware if you've been a listener for any period of time, my goal has always been to provide you with as much value as I possibly can through my two podcasts, Real Estate Investing for Cash Flow and the Mobile Home Park Investing Podcast. As our audience continues to grow, literally, we've been downloaded millions of times by folks in over 125 countries. I've had thousands of people reach out looking to get involved in our niche. And that's the phenomenal niche of mobile home park investing. For those that don't know, I've been a full-time real estate investor for nearly 20 years now, and I've personally invested in and have owned apartment complexes, various commercial properties, hundreds of single-family rentals, and I've interviewed some of the most successful investors in just about every other asset class, and I've arrived at this one very simple conclusion. Mobile home parks are hands down the best investment I've found to date. Why? They provide investors with the best risk-adjusted returns out of any other real estate sector that I've seen. Investing in real estate can get complicated, and I really want to simplify this process for you. If you're someone who wants to diversify away from the uncertainty of Wall Street and allocate a percentage of your real estate portfolio to mobile home parks, but maybe you don't have the time nor the inclination to personally locate good deals yourself, then our team will do it for you. At Sunrise Capital Investors, our team specializes in the acquisitions and management of undervalued and highly profitable mobile home parks. And we are now providing accredited investors with an opportunity to participate directly alongside our team in our up-and-coming deals. And let me say this, I believe that we are hands down the best in our space at sourcing highly profitable off-market deals. That's really what makes us unique in this niche and as investment managers. As stewards of your capital, we truly are aligned with our investors. We've structured our investment fund so that we as a company are incentivized in the same way the investor is, which is through the performance of the investment itself. In addition, we want to make sure that we not only make money for our investors, but that they understand how it's being made. That's why we provide our accredited partners with a private monthly podcast that walks them through the detailed updates on how their investment is performing. And we're very transparent, providing you with the good, the bad, and the ugly at times. And so if you'd like to learn more about the partnership opportunities with our team here at Sunrise, please go visit sunrisecapitalinvestors.com and click on the investors link to get signed up. It's absolutely free and you'll get placed on the priority list of when new opportunities come along. Also, feel free to call us at 833-CASH-FLOW without the O. Again, that's 833-CASH-FLOW without the O. And one of our investor relations team members will help you schedule an appointment to speak with one of our managing principals. If you have questions, go ahead and schedule a call and let's get on the phone and talk. And with that, guys, I like to leave with one last thought. From the time that I wake up in the morning till the time that I lay my head down the rest of the evening, my number one priority with everything I do, whether it be recording this podcast, working for our investors, helping each of you reach your investment goals, to providing a great experience to each of our residents who reside in our communities, is to add huge amounts of value to everyone that I come in contact with. Now, with that being said, I look forward to the opportunity of bringing value to you through Sunrise and through this podcast. Thank you for your time. Now, let's go ahead and get back to the show. All right, guys, now without further ado, I'd like to welcome Tim Kelly to the show. Tim, how you doing today, my friend?
I'm doing great. I am doing great. I really appreciate you having me on the show.
Yeah. So it doesn't look like you're on a ship right now, right?
No, yeah, like you said, sunny Pensacola, Florida on shore duty, meaning, I have a little bit of time where I won't be deployed. And that's really why I'm going hard. I'm fully pursuing real estate, outside of the full-time gig.
Okay. Let's learn a little bit more about you, Tim. For those that haven't heard you before, don't know anything about your past, you're full-time in the Navy. You've been building this portfolio for a number of years now. Let's go back to your introduction to real estate. Tell me a little bit, how you got introduced into investment real estate, and then ultimately how you've been able to build such a significant portfolio over these last few years since you started investing.
Yeah, absolutely. So again, my name is Tim Kelly, stationed in Pensacola, Florida. I'm Chief Petty Officer in the Navy, 13 years. Actually, you mentioned 2011. That was just, where I used my VA loan, which is one of the best benefits that the military has to leverage, mortgage for your primary residence. So I bought a single family home in where I was stationed before in the Virginia Beach area, the Hampton Roads area of Virginia. Mm-hmm. And that was in 2011, and I was in no means by any way consider myself an investor at that point. I just wanted to become a homeowner, but I knew that, I could move in, kind of force some appreciation, and then whenever I moved out, sell it for some kind of profit. So, But while I was living there, I actually was on a deployment in 2014 and a lot of free time. So I'm like, let's start reading, and never a big fan of reading, but once I started picking up personal finance books, I'm a big fan of, personal finance and building wealth. And the more I read, the more I realized real estate is like such a powerful vehicle. So then that opened my mind up. That's where I, stumbled across Rich Dad Poor Dad. And that's where I just started reading more and more books on real estate, investing in general. And then I found, the Bigger Pockets podcast, and the whole Bigger Pockets community is a great community. They actually had me on their show a few months back, so that was amazing too. Mm-hmm. And so the more I read about building wealth, the more I learned about real estate. The more I learned about real estate, the hungrier I became, because I'm like, this is so beneficial. People would be crazy to not put their capital into real estate in some way. So kind of fast forward to just a short 18, 19 months ago, where I actually closed on my first deal outside of my, my primary residence. And I actually did buy 2 pieces of raw land in Virginia Beach area before I moved here to Pensacola about 18 months ago. As soon as I moved here, I actually closed on a 4-plex. And I did that using an FHA 203K loan with the intentions of living in one unit, renting out the other 3. And that's where the whole house hacking thing was I took action on that, and I thought that was an amazing idea for my first deal. And then, after that, my second deal was a 42-unit apartment complex, because during that time, I realized multifamily real estate was all I really wanted to do. Single-family homes just didn't really appeal to me. I guess maybe I'm just too impatient for that cash flow. So all I really focused on was multifamily. And so all I was looking at, were apartment deals and multifamily. So, I bought a 42-unit apartment complex through a syndication with some friends. Then after that, I purchased a 3-plex. And then, shortly after that, a 27-space mobile home community. Then we, last month, just closed on a 75-space mobile home park. And now we have about 105 pad under contract here, not far away from us, just north of Mobile, Alabama. I mean, kind of that all happened within about an 18-month time frame. By the time I closed on my first 4-plex till now, that was less than 2 years ago, and I'm just having fun. It's just found a lot of people that I was surrounded by who had this, similar goals as me. And yeah, I mean, that's the key thing is partnering and surrounding yourself with the right people. So in a nutshell, that's kind of how I got into it, graduate to where I am today.
Okay. That's a whirlwind, man. 18 months. Geez, you've done a lot in a short period of time and you're working a full-time job technically. So I want to hit on the point, which is where the main topic of this show is going to come into play, and that you were focused on residential. Initially you did that, you bought that first property and then you bought that 42 unit apartment complex. And then you shifted your focus after that 42 unit. Well, no, you bought the triplex after the 42 unit, and then you shifted onto mobile home parks, correct?
Yeah, and then so the triplex was actually just other house hack that I used my VA on again, which I'm currently living in. So it's just a single family home with the detached in the back. So just taking advantage of that house hacking wealth building tool.
So let's talk about that shift of focus from multifamily, because it sounds like you're doing fairly well with that 42 unit, but the shift of focus from that multifamily over to mobile home parks. What was your first introduction to mobile home parks, and ultimately, why did you decide to change your course?
So, for those who kind of know anything about commercial and multifamily over the last 12 months, even closer to 24 months, the cap rates for apartment complexes across the country have slowly gone down. And that's for the reason being there's so much investor activity going towards that multifamily, and so many investors that are going after apartment complexes that, and obviously the market conditions and obviously with the interest rates slowly going up, your capitalization rate or your return on investment, for apartment complexes has gone down. So we're like, there's still deals out there, but they're just harder to find. You got to dig deeper and deeper. And I have another apartment building under contract right now. So they're still out there, and they're still around if you dig deeper and you have the right relationships with brokers. But mobile home parks was introduced to us because we're like, well, what else could we invest in? Because we really wanted to stay in the affordable housing space. And then I kind of just started listening to your podcast and a couple other podcasts and reading a few books on mobile home parks and articles and stuff. And I'm like, well, look, why don't we just hone our focus into this? And, the partners that I'm with now, also 2 other active military guys, and we formed the Affordable Housing Group. And that's all we're looking at now is mobile home communities. And the more I learned about mobile home communities, the more I realized how lucrative the asset type is. And it's an amazing asset type. And I think some investors are getting smarter now. They're realizing mobile home parks don't really associate with the stigma that most people have, that, they're a terrible asset class to own. Your residents are all going to be drug dealers or criminals or people who are unemployed. And that's not the case at all. So again, it's just education. The more you learn about them and the more you realize how there's so many opportunities available.
You bring up a good point there. A lot of people have they've got that negative stigma in their head, stuck in their brain about what mobile home parks are. And I always like to, give the comparison of, let's talk about multifamily apartments. You've got the really nice A-grade, newer built, better location in town, best location in town, probably has mostly white collar that lives in it. And then the other end of that spectrum, you've got the D grade, which are probably war zone type of areas, a place that you wouldn't want to send your worst enemy at night, right? And then you got everything in between. You got the B's and C's of the war, which are just a good old hardworking class group of folks. Same thing exists in mobile home parks, right? You've got very high-end A-class manufactured housing communities down here in Florida. We call them lifestyle communities. They're, palm tree lined streets. They have 3 swimming pools. They have a full-time activities director. They're not affordable at all. I mean, the folks that live there choose to live there. And then you got the other end of the spectrum, which are, in our space, it's 1 to 5 star. So those really high end, which would be A class, would be a 5 star. And on the other end of the spectrum would be a 1 star or less. Those are the war zone parks. Those are the places that you just don't want to go at night, right? Full of the drug, sex, and rock and roll that you just mentioned. And then there's everything in between, right? There's the ones in between that just have the good, hardworking folks that want to provide the best for their kids. They want to send their kids to good schools, and they want an affordable place to live and raise their family. That's what we focus in. And it sounds like that's what you guys focus in as well. And it's unfortunate that we have the negative stigma attached, because it creates some challenges. There's also some benefits to it, I guess, because it scares some people away, right? It keeps some people out of this space and creates this artificial barrier to entry, which exists, which really shouldn't. So talk to me a little bit about that 27 space park. That was your very first park that you purchased. Give us an idea of general location, how you found the deal, what you paid for it, and what really got you excited about it.
Let's see. It was actually a deal that I met through a relationship that I built last Christmas. I just stumbled across a large portfolio of mobile home parks, like 200 or 300 spaces total. And I had the name. I saw the name and the number on there. I called this individual. He ended up being a broker owner. And so I started building a relationship with him and said, hey, we're really interested in the space. We've been doing a lot of multifamily stuff. We're shifting our focus. And then, it turns out that the broker owner that I had started talking to had like this 200 space portfolio that he was going to completely redevelop. And they bought this 27 space park just to pull out the salvageable units from their park that they were going to redevelop and put those other units into that were still salvageable. And so they were actually looking for a buyer for that 27 space park. And that's it seemed like it was a pretty decent starter park for us, to get our first deal under our belt. And so we kind of went after it, and believe it or not, we got it at an incredible price. There was about 8 pads and 8 homes on there that were occupied, and there were only actually 11 developed spaces. So it was about half occupied with the amount of developed spaces, and the rest of the 16 pads had to be developed, which we're in work currently doing now. We're in the process of stabilizing that park as we speak. But it's in a great metropolitan area. It's in like that perfect, just north of Mobile, Alabama, which is a very much growing, and there's a lot happening in that market. It's one of the best cities on the whole Gulf for importation and exportation, and there's this very large aviation community. There's plenty of Walmarts all over that area, and Walmart is a good sign if it's in about 5 miles. That's one of our key market indicators. If Walmart planted one of their stores within 5 miles, we already like that market. So we got excited about it, and we kept the relationship with these guys that are going to redevelop that park. And then and we actually went to a city hall meeting a couple of weeks ago to introduce ourselves to the city council and the planning and development board. And that's always key. That's now part of our due diligence process, is build those relationships with the city council, specifically economic development and planning and zoning, so they know exactly what you're doing, what your intentions are. And, having those relationships are key, because if you need, an electrician, or if you need somebody, you don't have those relationships yet in that market, they're there, they can help you provide, those people. So, in a nutshell, that's kind of where we're at with that one. And we're excited about it. It's on definitely an upward trend here.
That doesn't sound like low-hanging fruit. It sounds like you took on a little bit of a challenge there. Developing the remaining pads, that's a little bit of an uphill battle. It sounds like it was already approved and zoned for those additional pads. But you guys, just give some clarity to the listeners. Meaning that you have to develop those remaining pads means that you've got to go put, so you said in Alabama, I don't think they require like concrete pads or anything like that, but you basically have to put all the infrastructure in place at each one of those respective sites, correct?
Yeah, and that's the thing. Like that's phase 2 currently. We're in phase 1. Once phase 1 is complete, we're actually gonna see what kind of rates we can get to refinance it before we go and dump a whole bunch more capital into that redevelopment, because that redevelopment would actually take a lot of leveling. It's kind of got some trees, and it's kind of on a downward slope a little bit. So it would probably take a little bit more than we would expect to get that completely developed and ready to occupy pads. I know there's a demand for, tenants, and there's a demand for housing and plenty of space there, but we're going to complete phase 1. We're going to get those 11 spaces completely occupied, and our lot rent in there, we're actually getting $340 lot rent, which is great. Wow. We're all going to be tenant-owned homes. And so once we get that, we're actually going to get some terms from local lenders to see what a refinance would look like. And then we'll kind of go from there. And we're not committed to redeveloping those yet, but we just kind of want to see where we're at. Once we get all the 11 spaces completely developed or completely occupied, that's, then we'll move on to phase 2 and redevelop it.
Right. Is it city water, city sewer, I'm assuming?
It is city water, but it's on septic tanks.
Septics, got it. Okay. Sounds good. And how'd you guys fund that? It sounds like that probably you paid cash for it, I'm guessing, or got a hard money loan?
We ended up just getting a couple lines of credit through some banks that we had relationships with. So we didn't actually have to get a commercial loan or raise any capital for that. It was all through just cash and lines of credit that we had. But yeah, that was for that particular deal.
Okay, so you're still working on that one, and then ultimately, simultaneously, you're looking for other deals. I think you said the second park was it 75 spaces, so a lot larger than the first?
Yeah, that one closed just a few weeks ago, and that one's in a completely different market. That's in Northwest Indiana, not too far outside of Chicago, in Calumet City, which is actually in the Gary, Indiana zip code. But yeah, 75 spaces. Pretty excited about that. There's not a whole lot to do with that, except for actually utilize the individual water meters that the prior owner was paying for all the water, even though there was sub-metered already set up and in place, which is kind of still blowing our minds. But we ended up actually also raising capital for that, and we paid cash for that. We had the intentions of using a commercial loan and having commercial debt, which we had lined up, and we were just going to raise the 30% equity that was required to put, to close the deal. Mm-hmm. But the financing fell through at the last minute because we trusted the wrong lender. They sounded excited about the deal, and last minute they backed out because they just weren't they didn't do a mobile home park deal, and they realized at the last minute that they didn't want to take the risk of doing it, because if you don't know anything about parks, you're, especially as a lender, you're not going to want to do it. So, and then last minute we had to raise, another $400,000 or $500,000 just to get the deal closed. And we ended up actually syndicating that deal through accredited and sophisticated investors. And we got that deal done with basically all cash.
Okay. There's actually a lesson there that I want to make it a point of mentioning. Having that lender back out the last minute, you mentioned a key point there is that they had never done a mobile home park before. And so tell me how I know that, that's the case. I mean, that exists out there, and it happens more often than not. It's because I've gone through it myself, and it's painful, and it puts you in a really, really tough situation, especially your money's hard at that point in time. If that's literally all you have that you're working with, like you've literally saved up money for a long time, you need to make one deal work, and then a bank backs out on you and you don't have a plan B in place, it could put you in a really tough and challenging situation. So there's 3 qualifying questions that one might not apply to a lot of the listeners, but there's 3 qualifying questions that I ultimately ask any bank that I'm calling on. And most of this really applies to like regional or community sized banks. We have some good commercial mortgage brokers that specialize in our space that we work with on deals that are typically, $1.5 million or $2 million loan amount or larger. But on the smaller stuff, a lot of times you have to kind of resort to the local community banks or regional banks to do your lending for you. And they're hit or miss. In fact, more miss than hit. And so the 3 qualifying questions I ask right out of the gate as I'm making these phone calls or as I'm going in and meeting bankers is, number 1, first and foremost, have you ever loaned on a mobile home park? Because ultimately, guys, loan officers are salespeople. Right? I mean, they don't make the decision. They take it to a loan committee or a credit officer. They don't make the decisions. It's their job to close as many deals as possible. And I promise you that most of them will tell you that, oh, yeah, we can do that. We've done everything. We've done all types of deals. Whatever, we could do anything. BS, right? So if they've never done a mobile home park, don't be their guinea pig. Doesn't mean that they don't have the best intentions. Doesn't mean that they might ultimately they might be able to pull it off for you, but don't be their guinea pig, because you might end up in a situation like Tim did and like I have in the past as well. The second question, qualifying question, if we make it past the first one, right? So if they say, yeah, we've done parks before, I make them tell me a little bit more about the parks and how long ago it was that they financed these. If it was like 1, then I'm still a little, concerned. But if they've done like a handful of them or a dozen and they've done them recently, then, that pretty much satisfies my needs. The second qualifying question is, this is assuming that it's out of state or out of market, meaning that it's either a completely different MSA or a completely different state from where you're based. A lot of local and regional banks, they want the borrower to be in the same market as the asset itself. And so don't waste your time going down a rabbit hole if ultimately that's going to be a hang up for them or a hang up for their credit officer or for their credit committee. So ask right away, like, hey, I'm in Florida. This park's located in Indiana. Is that going to be a challenge? Just get out of the way. If it's a challenge, move on to another bank, because there are community and regional banks that don't necessarily have that as a barrier. And then the third one, which might not apply to a lot of the listeners, is, we have a syndicated fund structure where there's a general partner and a limited partner relationship where the general partners, if it's a full recourse deal, only the general partners actually sign on the recourse of the loans. The limited partners do not. Some smaller banks or even regional banks don't understand that structure, or they think that everyone that has ownership ultimately needs to sign as a guarantor. Well, I could promise you that our limited partners are not going to be signing. So we make sure that we get that out of the way as well. So if you intend on syndicating a deal, whether it's just one deal on its own or a fund structure like we do, you need to have that conversation. You need to get it out there in the open. So those are the 3 qualifying questions that if it's a new bank we've never dealt with, most of the time, again, on a community level scale, we always get those out of the way right from the get-go. If anyone, it gives us an uncomfortable feeling as far as their answer, we move on to the next bank, So in any event, I wanted to make it a point to bring that up. So I didn't mean to interrupt you, Tim.
No, that's such great advice. And we learn those lessons as well. Now we have relationships with lenders who we know have mobile home parks in their portfolio. They're still looking for mobile home parks in their portfolio, and they know how to underwrite them. And I mean, for your listeners, man, that's that if you guys just follow what Kevin just told you about and kind of just have those as your proper due diligence during, your lender time, that'll save you so much energy and potential loss in time and money.
Yeah. I mean, once you get to the $2 million loan amount, it's a different world. It's a lot easier to get financing. It's a lot easier for a commercial loan broker to want to spend their time and energy on helping you place the loan. We've got some good relationships with some loan brokers that specialize in this space to where we've done enough deals with them to where we take them something that's like, right now, I got one of my guys is working on a loan amount that I think is like 1.3, which is typically if he'd have just taken that deal to him and he didn't know you from Adam, he would have said, no, I don't have an interest. But he's helping us place it because we obviously give him a lot of other business. But it's a lot of legwork for them it's just as much legwork, if not more, to do smaller deals and place them than it is the larger deals. And so loan brokers typically make 1% of the actual of the loan amount. And so it's not a huge amount of money when you're talking about like a $1 million deal. It's just not for the amount of energy they have to put into it. So I want to talk to you about the park-owned home component, right? That evil word, park-owned homes. Some people love it and they embrace it. I just got back from a conference up in Chicago, went to NCC, which is one of MHI's conferences. Always have a great time going to the different conferences in our industry and always running the conversations where I'm talking to a park owner that fully embraces the park-owned home model. They love it. In fact, they really have started moving their business towards that model completely because they feel they have the utmost control over it. They like it. They feel like it makes more money. I feel quite the opposite about it. I feel like it's incredibly time-consuming, management-intensive, and you don't necessarily have more control over your residents. You've got a more transient resident base and lots of other downsides to it. But I really fall in the middle of the road with park-owned homes because if you want to be in this business, you have to succumb to the fact that you're going to own some of the trailers, either a lot or some parks you won't own any, but you got to be comfortable with that side of the business. But we always work a plan and try to execute it accordingly to sell off any of the park-owned homes that we have and try to get more of a homeowner mentality. That's who we want. We want long-time residents that stay, that are sticky. And those that rent are just like apartment renters where their typical length of stay is maybe 12 months. Maybe you get 24 months out of them. But typically it's a year and they move on. So the question, Tim, is how do you feel about park-owned homes and are they a part of your future?
We are so much in line with you. I mean, and your pretty much your viewpoint, and of course we do own some homes, but we are in the process of creating more homeowners in the community because they're on some kind of lease option or mortgage, to us, and we're creating homeowners because that has that more pride of ownership. They take more pride. They it's an improved community, and we absolutely prefer to have 100% tenant-owned homes in our park where we just collect a lot rent. They are pretty much they have the burden of all the expenses, the taxes, and everything. So whereas they'll have more pride. So it's a win-win situation. I think it's more of a long-term tenant, even though you hear mobile home, they're not very mobile. I mean, it's a process for those of you that don't really know. You can't just like hook it up to the back of a pickup truck and tow it off. It's not really how it works. It takes, 4, 5, 6, sometimes $7,000 just to, move a home after the skirting is removed and replaced and all the utilities and infrastructure hooked back up. So it's not very easy to move. And that's another reason why we like this asset class. But yeah, to answer your question, man, we prefer 100% tenant-owned homes. And if most parks that we buy do not have that, but we're striving to get to that point by creating homeowners.
Got it. So you own a third park as well, correct?
Yeah. So
we're in contract with a third.
Yes, we're under contract. Actually, with my partners and I that are in this group, they have the one that actually, as we were creating the partnership, they closed on. So I actually don't have any share in that, but I've dealt with it and I've learned from that park, learned from their mistakes. So within our partnership, we're on our fourth.
Okay.
And yeah.
The reason for that question is I want to ask about, it's been a short time frame, but you're going on this fourth park here, but you have three that you've been involved in. And so what type of large challenges have you guys faced being new to this asset class? There's really the unknowns that pop out. No matter how much theoretical knowledge you have in a particular subject or space, give it mobile home parks. Once you actually start buying them, there's obviously always those unexpecteds or those gotcha moments. So talk to me about some of the challenges that you've run into and how you've ultimately overcome them.
I think I slightly mentioned it before, that this park here in just north of Mobile, Alabama, we did not talk to the city and the Economic Development Office and Planning and Zoning before we closed on the deal. So I think that was a mistake that we learned from, and now that is incorporated in our due diligence, like I mentioned before, to where, before we even close on the deal, we build the relationships with Economic Development and Planning and in the city. Now we have a really good relationship with the mayor, with the city inspector. And we essentially, according to how their ordinances are written for the city inspector has to actually be there and approve any moves of homes going in and out of any of the parks in the whole entire city. So we essentially need his approval, because then we have to go through him. So because there has to be police escorts if any homes are moved in and out of the parks. And because of the wind restrictions, a lot of the homes are actually condemned and grandfathered in. And if they're moved, then it's illegal to replace. But they're kind of grandfathered in place. But once you move them, it's they're condemned and they'd be illegal to re-sit anywhere else. So I think the biggest lesson is to build a relationship with the city, with the city hall, specifically Economic Development and Zoning and Planning, so they know exactly what you're doing and what your intentions are, especially if, other park owners in their cities aren't like us. Many of them are slumlords. Many of them are mom and pops who don't really take care of their parks. And a lot of these cities think that that's how all park owners are. So they assume that new park owners coming in are just going to allow bad tenants to occupy their home. So build that relationship with them and let them know what you're planning on doing, what your intentions are, that you actually you're trying to improve their community, evict the people who are not paying, and try to bring in a better tenant base. That's probably the other one, I guess. The other thing is ensure you're doing your due diligence on the infrastructure, specifically if they're septic tanks. Get a health inspector in there or someone certified and licensed to work on and inspect and clean out the septic tanks to have that completely under control before you close the deal as well. And that's another thing that we definitely learned as well.
So you guys did not do an inspection on the septic systems, but you ultimately ran into a challenge with it? Is that what I'm gathering?
Yeah, so that's another thing that we're working through right now. We did not have them completely inspected. We did have documentation provided to us that they were cleaned out on an annual basis before we bought it, but we did not have any experts actually go look at them. And now, due to what the city inspector found, he discovered that there's actually the way it's set up and configured is that there's 2 units per septic tank. And initially they were afraid that that's not enough capacity, but we've learned that the way it was designed, there's enough capacity to hold, enough septic disposal for 2 homes into just 1 tank. And I know a lot of parks, there's 1 septic tank per. And do you have any parks where there's 1 septic tank per multiple homes?
We have one community that has 1 tank per 2 homes. Yep.
Yeah, exactly. And that's how ours is set up. And so that's the only issue that the inspector came up, because he didn't want them to overflow or anything like that. Because obviously with all the transmittable diseases that could be floating around if that thing overflows. So that was the only thing we didn't confirm beforehand. But everything's smooth, from this point. But yeah, just completely understand and know, what you're getting into, and make sure everything is certified and all the pedestals, all the utilities are inspected and certified and tagged, and they should be locked. If you could open and close the doors, that's a huge hazard. Kids running around the park, playing with the boxes and the pedestals. If they can open them up, that's a huge hazard that could become fatal and turn into a huge liability. So, and then that's another thing, just understand exactly what you guys are getting into. And the more you conduct your due diligence steps, the more you're going to learn how to do that.
Okay, good deal. How are you guys managing this process? So I know Mobile is not too far away at all from where you're at in Pensacola, but Chicago is, and I'm not sure exactly where the newest addition, the park that you're going to be closing on here shortly, where that one's located. But how are you guys handling the management, let's say, of the Chicago one?
So the Chicago one, we sat down with a number of different third-party management companies in that area who specifically focus on mobile home communities, and we chose the best. So there's a third-party company that's managing that for us while we're here, and we're very pleased with how things have been going so far. And then for our deal here in north of Mobile, it's about an hour away, so it's close enough to where if we need to go there, we can, but there is a local individual who's managing a bunch of parks in the area, and we chose him. He's doing a great job, and he basically is there to collect the rent and help enforce the rules and help coordinate the moves, and he has relationships with a lot of people in that area, and he was referred to us from the guys who actually brought us this deal and offered us this opportunity because this same individual manages some of their parks as well that are in
okay. Good deal. And are all these deals that you either own or in contract on, are they all sourced through brokers?
Yes, that is how we find the majority of our deals. We've never actually done any kind of marketing campaign or sending yellow letters. It's just all through broker relationships and or other relationships with people that we know through our managers and people that we know who understand that we're looking for mobile home parks, or people through our RIA, the Real Estate Investment Association locally. They know we're the mobile home park guys. So if they hear of any mobile home parks that are being sold or off market, they kind of just throw them our way. And that's probably our favorite way to locate deals. It's just through relationships, brokers and other people in the industry.
So what does the long-term strategy look like for you and your partners as far as the mobile home park space is concerned? I mean, at some point in time, I'm assuming, I don't know how much capital you guys have personally, but it sounds like you've been using a lot of your own money. At some point you get tapped out. I mean, do you guys have grandeur visions of growth, or do you just plan on buying a few and ultimately kind of replacing your full-time income?
Yeah, so I mean, we're gonna keep buying and buying and buying until we can't find any deals. And I don't think that's going to happen anytime soon, especially being in this space. Fortunately, we have, the more deals that we've done, the more capital investors have, come our way and have been interested in what we're doing. And that's why we were able to, pay cash for this last park that we bought through our syndication. There's so many people out there who want to passively invest in commercial real estate. And sometimes, we just have to educate these investors on mobile home communities because most of them just don't know, all the benefits. And once we sit down and talk to them about our business model and what we're doing and all the benefits of owning mobile home communities, more and more people are interested in them. So, I mean, we don't plan on throttling back anytime soon. We're going to, this park that we have under contract is about 2 hours north of us. It's in Troy, Alabama. There's a big university up there. Mm-hmm. And it's a very solid market that we're really excited about. And, once we get that deal done, and we're, probably going to maybe take down the next larger one. And so, yeah, we're not throttling back anytime soon. We're going to kind of just keep doing what we're doing and take it one day at a time.
Is that one in Troy? How large is that park?
That's about 105 space.
Okay. Good deal.
Yeah.
Good deal. Is your occupancy, is it fairly strong today, or is there a big infill project there?
It's definitely stable. I think it's, between 80 and 90% occupied. We actually haven't been there yet. It's been just everything through financing and a paper shuffle so far. So we haven't visited the park yet. We've seen pictures and videos and looked at all the documents, and we submitted an offer and we got under contract officially. So our due diligence will probably start this weekend or maybe beginning of next week. We'll actually travel up there and we'll have our checklist of everything that we need to look at. But per the documents, it's between 80 and 90% occupied. So there's a lot of upside to it. And it's just, again, it's another mom and pop owned park. They've owned it for, I think, the last 25 or 30 years. And they're just done and they're ready to kind of sit back and retire. So perfect opportunity for us.
Yeah, fantastic. Is that one public utilities or private?
That one's city water, city sewer.
Okay. Good deal.
Yeah.
Good deal. It's already sub-metered, or is there some upside there to sub-meter back the water and sewer costs?
That's already sub-metered for electrical and for water as well. And the utilities are already being paid for by the tenants. But there's growth for rents. A lot of rents are a little bit on the market. And of course, it's not at full 100% occupancy. So we'll just get more.
And what are you guys looking for? I mean, as far as what's your criteria, not necessarily cap rate, but cash on cash return, or maybe it is cap rate on the front end going in. I typically try to just look at the cash on cash return because a lot of these parks aren't being run all that great. A lot of stuff we buy is value add. So applying a cap rate to it on the front side, you're not really doing yourself justice, but we want to know what we truly can achieve in a 12-month span as far as an actual annualized cash on cash return. So what kind of criteria do you guys have as far as a buying side?
Yeah, I mean, we're not looking at anything unless we know we can get it under contract at a double-digit cap rate, and that's mainly because we know we have investors that we want to provide extraordinary returns to, also in the double digits. So, with interest rates going up, I mean, the deals that we're looking at, and most of them that are still listed above a 10 cap, but I mean, our offers are between a 10 and 12 cap, and we usually won't buy a deal unless it's well over a 10 cap with room to grow, because we need that arbitrage and the difference in the interest rates, especially if we're getting long-term commercial debt. And it's, interest rates are now, above 5%, closer to 6% on some long-term commercial debt, especially for, the Fannie and Freddie institutional debt that we're looking at now. The cash on cash returns that we're offering our investors are no less than 8%, but we're really shooting for that 10% annualized return, cash on cash. Plus, they would get also equity in the deal as well.
Sure. Okay. Very, very cool. Well, it sounds like you guys are doing great things. Very exciting. And it sounds like you made the right choice. So as you obviously know, due to this podcast and everything else that we've talked about, that we love mobile home parks. So it's our space. And so it's a little bit of a biased opinion. But in any event, I think you made the right decision by switching teams and going from multifamily to mobile home parks. So what I'd like to ask of you, Tim, before we wrap things up here, is if you had any, being that you've been buying parks now for about a little over a year now, if you had any final words of wisdom that you could leave with our either new or aspiring investors that are listening in here that could motivate and inspire them as they progress in their mobile home park investing career, or buying their first park, what would those words of wisdom be?
So, mindset is everything. I can go so deep into mindset and making sure you're surrounding yourself with the right people so you can be in the right mindset. And, waking up with intent, every morning, waking up knowing that you're going to complete certain tasks and accomplish certain goals and just crush the day ahead of you. Because there's a lot of negativity floating around, and there's a lot of people that, want to see you fail. So knowing that you're going to be hitting some obstacles and some brick walls, keep it in the back of your head that this is all just part of the process, and just don't stop moving forward. Never, ever, ever stop moving forward. Always figure out a way to kind of keep pushing that needle towards your goals so you can inch more and more every single day towards your goals, even if it's just one thing that you're accomplishing that day to get towards your goals. And again, mindset is everything. Are you kind of getting up, and do you have a morning routine where you're brain feeding, you're mind feeding the right information, whether it's, you're reading scripture, or you're reading it, listening to a motivating podcast, or going for a run, or getting a good workout in, to where you're starting the day off right and you can kind of crush the day ahead. I think mindset is crucial, and that all really depends and is going to be dictated on who you surround yourself with and the content that you are allowing be absorbed into your mind. And, that's, I can go so many different ways with that, but I think we'll leave it at that.
No, that's fantastic. And for those, Tim, that want to learn more about you and your company, where can they come find you?
You can reach out to me anytime. Go to thetimothykelly.com. That's my personal website. You can go to kellyhousinggroup.com. That's the real estate website. And then, I'm pretty active on LinkedIn, just, the Timothy Kelly. And then, Instagram at the Timothy Kelly. Facebook is Tim Kelly. Or don't even hesitate. If you want to just shoot me a text or give me a call, I'd love to kind of link up with you and help you out. Or if you're interested in investing with us, area code 847-910-9161. Reach out anytime.
Okay, fantastic. Well, Tim, this has been an absolute pleasure, man. Thank you for joining us here today. It's been awesome hearing about your journey, and look forward to following your success, man. Just, I guess, keep doing what you're doing because you're making magic happen.
Yeah, I appreciate it, man. It was an absolute pleasure being a guest on the show, Kevin.
All right, guys. Well, guys, thanks for joining us again today. Just want to thank you for always being here. Tim and I wouldn't be here if it wasn't for you, if it wasn't for you guys joining in. So really appreciate your time. We're grateful for each and every one of you. And until we meet again next week, make it a great one.
Congratulations for taking the necessary steps to achieving massive success through the highly lucrative niche of mobile home park investing. Be sure to visit our website, mobilehomeparkacademy.com, to download your free digital ebook version of the 21 biggest mistakes investors make when buying their first mobile home park and how you can avoid them. And while you're there, be sure to subscribe to our free monthly mobile home park investing newsletter, which is jammed full of valuable tips, tricks, and strategies to help you accelerate your path to success as a mobile home park investor. More information about this podcast and its hosts can be found by visiting mobilehomeparkacademy.com.